Hello, everybody. It's Professor Reiko here for our seventh video on pensions, which will wrap up the majority of the chapter content that I typically cover in my class. So let's get going on this last video. So we've got some given information here. Once again, we're continuing through with the same problem throughout, which means there's no beginning balances given because those beginning balances are actually the ending balances from video 6. So if you go back, you'll see those numbers in the sixth video, and that's why they show up as our beginning balances here. All right, the only new information we have here is this right here, and this deals with our amortization, so we'll get to that in a second. We know how to deal with everything else, so let's just get right to the corridor amortization. All right, so if you remember gains or losses, if you go back to the second video, we talked about components of pension expense, and we talked about, especially on the liability gain or loss side, how they don't initially affect pension expense, but they do influence the balance of the PBO, which has interest implications, and it also leads to and it says we may have to amortize it. Okay, and that's what we're going to do here. All right, so what we're talking about is in this accumulated other comprehensive income gain or loss account. Typically, you have gains and losses both in that account, and a lot of times they'll offset each other. All right, but the question is, what if we have a large balance that accumulates either on the gain side or the loss side? Okay, well, FASB says that we need to start to amortize that, and what we're going to do is use this corridor amortization amount to kind of determine if we amortize or not. All right, so let's look at how that's defined. All right, so amortization is required only if accumulated other comprehensive income is greater than 10% of the greater of the beginning, the PBO or the plan assets. All right, so typically the PBO is greater because we're underfunded, but it could be either way. All right, so you should be able to eyeball this, and I'm going to actually flip over to the second page. So let's read it one more time. If the accumulated other comprehensive gain or loss beginning balance is greater than 10% of the PBO or plan assets, in our case, it'll be the PBO, then we're going to amortize. So let's just flip over here real quick. All right, so what we're saying here is, here's my beginning PBO. 10% of that would be $40,208. Here's my beginning gain or loss. That is clearly larger than that, so we're going to amortize. Okay, so let's keep that in mind. So the question, are we going to amortize? Yes, we're going to amortize in this problem. All right, so if we're amortizing a gain, okay, I mean we had too much of a gain, we're going to decrease pension expense with a credit. And actually, I should probably have this on here, and then we're going to debit the OCI gain or loss. Once again, amortization is reducing the balance. So if we have too much of a gain, we have too large of a credit balance. So that means we're going to have to debit that column, and then vice versa if we have too much of a loss. Okay? So the way to calculate that is I'm going to do that right here. So we already said we know we're going to amortize, right? Because remember we said that the beginning PBO, so 40,000, I'm sorry, 402, I believe it was 080 times 10% gives me 40,208, all right? And then we compare that once again to the beginning balance, all right, which is 48,420 of the OCI gain or loss, okay? So the gain or loss is too big, so we are going to amortize. So we did that, and like I said, you should be able to just eyeball a problem and say yes or no, do I need to amortize? Right. So what we do is we amortize the excess, meaning the 48,420 minus the 40,208. That would be our excess, and that's 8212. All right, and what do? We take the 82. Oops, sorry, scribble that out a little bit. We take the 8212 and divide it by the service years remaining. Okay, so I mean, if you go back up here, the average service life of the employees is 20 years. That's what we're using here, so 20 years. All right, so that means this year we're going to amortize 411. All right, so when we get to there, to the worksheet on the next page, that number is going to end up in our amortization for the gain or loss row. All right, so once again, pretty easy math. This part right here, you can just eyeball it, and then you actually have to just kind of, spell that out in your calculator to get that number. All right. So a couple other calculations that we need to do before we get started. The interest cost, once again, is the beginning PBO. times 10%, which was the settlement rate, which is 40,208. And this is maybe a bad choice of numbers on my part. Make sure you understand this 40,208 has nothing to do with that 40,208. They're both based on 10% of the same number, so they turn out to be the same, but they're not equal on purpose. All right, so then remember we need to do the asset gain or loss. So we have an actual return given as 32, and then remember we're comparing that to the expected return. Remember the expected return is the beginning plan assets times the expected return. Okay, so that's 23,620. All right, so that's 83,80. All right, so once again, the actual return is greater, so that's a good thing. So this is going to be an asset gain when we get over to our worksheet. All right, so we pretty much have all the math done. So let's flip over to our worksheet here. And let me get this scaled down a little bit. All right, so we've got all of our columns up there at the top again. And let's just start filling things in. All right, so remember, service costs, interest costs, they all behave the same way every time. So we've done these a number of times now. It was 28,000 given. Once again, our employees work another year. Therefore, we owe them a little bit more. So we expense that and increase our PBO. Same with the interest cost. We just calculated that. All right, we had an actual return given as 32,000. Remember, that decreases. That's a 2 right there, 32,000. Remember, that decreases pension expense, and that's our trustee reporting to us that the plan made 32,000, so that would be an increase over there. We have the asset gain or loss, which we just determined was 83,80 from the previous page. All right, so remember, once again, it goes in these two columns. If you have trouble remembering which one is the debit and which one's the credit, remember it's a gain, so gains are credits, so that's one way to remember it. The other way to remember is these two numbers have to net out to equal the expected return, and so a debit in the pension expense column gets us there. All right, we amortize the prior service cost, 24,800. So remember, back in one of the earlier videos, we created the prior service costs with the amendment, and now all we've been doing is amortizing it down to 0. So we're getting a little bit closer each time to 0. Contributions, remember, that is us funding the plan. So it's a credit on our end because we're sending a check to the trustee to be invested as part of the plan assets. The benefits paid, once again, remember, is the trustee that cuts the checks. Therefore, it comes out of the plan. But it also reduces our liability, our obligation, I should say. All right, so remember, our obligation is a credit balance, so we reduce that with a debit. All right, so our last thing left here is our amortization of a gain or loss. All right, so we determined that was 411. That goes here and here. All right, so once again, now remember, ignore this number when you're doing the amortization. Okay, the amortization is based on the beginning balance. So what do we, if you look up the top, we have a debit balance up here. And it's too big, so we're amortizing it, which means this has to be a credit. Okay, so however you want to remember that, that's typically what I do. I look at the beginning balance, and if I'm amortizing it, I have to do the opposite, wherever that beginning balance is. So whatever makes more sense to you as far as remember it, kind of go with that. All right, so our summary journal entry, then we're just putting stuff in place here. We've got 69,799, the credit of 42,000. Once again, make sure you don't add this, net that number in with this. You can see this is 24,800. Once again, all that's we're including here is the summary journal entry is what happened this year. So make sure you don't net those numbers in with your things that happened during the year. Those are just your beginning balances. All right, this is 8791 on the year because we had two different credits. And this works out to be 57. I believe that's a 7. Can't read my writing. I think it's 5792. All right, so my ending balances. So this is now down to 18.2. We're done, but if we did this one more year, we'd probably see this go to 0. Remember, we're amortizing that down. This balance is now 39,629, and this is now 160,088. So this is the first time that we saw a debit in this in that spot right there, which means we're less underfunded than what we were. As you can see here, we're still highly underfunded. So we should be underfunded by that amount. So that's 440,288. All right, and this is 280,200. So once again, your check this should equal the difference between those two. Remember, this number right here says we have a pension liability of $160,088, which means we're underfunded by that amount. When you compare these two numbers, you see that we are underfunded by 160,088. Okay. Another thing I wanted to point out here is this amortization number. We divided by 20, but this does not mean we do 411 every year for the next 20 years. We're going to reevaluate it again. So let's just do that right now. So remember, we can eyeball this and say, do we amortize or not? So remember, we're going to take the greater of these two numbers, which is 440,028, the PBO, 10% of that, so we're at 44,000 and some change. All right, and then we're comparing it to this, which will be next period's beginning balance. Well, the 39,000 is less than the corridor, so next year we will not amortize, right? So you can eyeball it and say yes or no, do I amortize it? And then if we do have to amortize, then you have to amortize the excess and actually do the math to get that. All right, so that's kind of puts it all together. We've seen everything now over the past the 6 videos before this, where we defined everything, put it into this worksheet format. Practice with these worksheets. If you get comfortable doing these, for my class, I give them a blank sheet, a blank worksheet like this, basically the grid with everything removed from it, all the words, and they just fill that in as part of their problem on the test. So if you get comfortable doing these when it comes to test time, you're really able to really just start filling things in and hopefully getting to the right answer. If you do mess up, just quick test taking skill. You can always tell if this number doesn't work out right here, students start to freak out a little bit. Just work backwards and make sure you netted all your columns correctly. That's probably a good place to start. And then a lot of times, I've noticed students will miss, or they just they leave off this row or they leave off a row. They forget to include it. So just kind of have a method. Go back to the given information. Another thing is go back to your given information here. And go through and just, kind of check things off. Say, I got that, I got that, I got that. Make sure you've included everything in your worksheet. All right. And if your teacher does it like me, another thing is I always leave a space before my summary journal entry, just because if I forget something, I can go back and fill it in on a test as opposed to having to erase a bunch of stuff and squeezing it in. It just gives me extra room to fill things in. So just a few things that might help you come test time if your teacher does a pension worksheet problem like this on the test. All right, so that wraps up pensions. Hopefully these 7 videos have helped you provide some good supplementary information to what your professor's already given you. Hopefully it helps you homework and test time and getting ready to hopefully do well on the test that this chapter will be covered in. All right, so I hope you're enjoying it. Please tune in next time. So the next chapter as far as the KESO book goes is leases. So make sure you tune into those because that's typically what I view as one of the tougher chapters for students. So make sure you spend some time going through that. All right, hope you're enjoying it. Take care, and I'll see you next time.